What's up, everybody? Thank you for joining us for another episode of our Flow Traders interview series. My name is Charlie Bathgate. I'm the CEO of Sang Lucci and Wall Street Jesus. And today I'm joined by two members of our team. This is Eric and David. Please say hi, guys.
Hello, everyone. Pleasure to be here.
How's it going?
So these guys are, what we're here today to talk about is Gamma, and there's a lot of different directions that we could take this, this conversation. As you can see on the screen, Eric goes by Norse in the room, so I'm gonna call him Norse. If you're not a Steamer member and you're wondering what the hell I'm talking about, he's from Norway. We call him Norse. It's that simple. These guys are here to help us dig into Gamma and the relationship between Gamma and Flow. I mean, obviously, this whole series is about Flow, how different traders use it, and how it can be of assistance to helping traders out there find a greater degree of edge. And as we talked about this series, and as we prepared for the Complete Flow Trader, the course with Wall Street Jesus, starting up on July 1st, we realized that we'd be remiss if we weren't including a lot more information about Gamma these days, just because of how much more importance it's taken on. So maybe Norse and Dave, like we just start there. Why do you guys feel like why do we need to talk about this? Why are we here talking about Gamma? When maybe in the past we wouldn't have. Norse, you want to start with you?
Yeah,
Around the horn?
yeah. I think a trend that we have seen in the markets basically since COVID, right, is we've seen an explosion in just the amount of options trading and the volume being traded in options, and it's almost like the options market have become maybe not more important, but a lot more important than what it was before compared to the equity market. So, some people have described it as a, tail wagging the dog, right? Where the actual activity in the underlying sometimes is more important and drives the stock prices. So something that we've seen in the later years is just like how much more important options are, the options flow, and because of that, Gamma has also become like an increasingly more important component of the market structure.
Yeah.
And as far as me, it's gamma is just it's another dimension, and it's something that I try to look at everything I can that'll help my trading, but I try not to have too many things that overlap each other, right? And with gamma, we can look at several different dimensions of the options flow at one time. We can get an idea of what the deltas are at, where the open interest is at, what the theta is by the different expirations. So it gives me a way to just kind of get a little deeper into the flow without having to, at least with the tools we use, without having to watch a chain and do what Jay does all day long. And find that it helps with, areas to get into trades, get out of trades, but also it helps a lot with the market sentiment. We can look at our tools and get a good idea of when maybe the market is buying more volatility, when they think ranges might expand or things of that nature. So it actually adds several different layers um, of data that we can crunch and add to our trading.
Yeah. I mean, and by the way, I totally buried the lead in that Dave is the developer of the Gex-Ray. For anybody who's watching this who's a Steamer member, you definitely know about the Gex-Ray. It's one of our most popular tools. It's something that has really helped a lot of our traders level up. And Dave is the man who created that with some support from Norse on the product side. So I mean, maybe we talk a little bit about like how you're seeing traders in the room, and how you guys, the two of you in your own trading, how you find yourselves using that tool and maybe Gamma more broadly. Would that be helpful to kind of illustrate the power of all
And
this?
it's a good thing you bring up the Gex-Ray, right? Because the Gex-Ray is a tool that gives you levels based on the 0 DTE expiration options or the weekly options. So I should have mentioned that. That's another reason why we want to put more importance on Gamma, because we have seen over the last, I want to say, like year to two, an explosion in the volume of the 0 DTE options. It's
Right.
almost like every month we're introducing 0 DTE options on new instrument. We've had them on the indices for a while. And the way that Gamma works is Gamma is actually higher on the options that are shorter expirations. So their Gamma influence from the explosion in zero DTE activity has then again made gamma even more important. So, I would be remiss if I didn't mention that as one of the reasons to why gamma has become so important and why you hear so much about it. And, you know, you can see from a lot of different vendors that we are now often talking about like put walls and call walls and like a gex flip area. And what the gex ray does, it's giving you basically three levels on an intraday basis that can move depending on where there is the most gamma, right? So for example, the call wall is going to be the strike with the highest amount of positive gamma. So from the gex ray we can get important levels that can be used for initiations of trades and targets. But the really cool thing about these levels is that they move intraday. And when the levels move, it does tell you something. It's pretty important information when a call wall, for example, shifts from one price level or strike to another, whether that's up or down. It's going to give you some significant information on sort of like the sentiment in the market at that time.
Yeah. What is that information that it's telling you? Like when one of those walls move, what is that telling you?
Yeah.
One thing that,
Yeah. Sorry. Go ahead.
I was going to say another thing, like one of the first things I look at is in the morning where the walls actually come in. So, we have other things that we look at, other tools we look at. We have other gamma tools that we look at, higher time frame gamma tools as well. And whenever we see a lot of confluence with those levels, that's something that gives us extra confidence. We know there's a lot of volume or open interest there. But whenever we see the levels in the morning and where those levels come in, tell us something generally. And how far apart they are. Like I talked about volatility earlier. A lot of times we can look in the market, we can kind of judge just from the gex ray alone what the volume coming into the market is. And generally that first 15 minutes, we believe that it's mostly institutional flow. And this is derived from papers by Ambrose Capital and other people that have done a lot of research on this. So if you can get a good idea of where the institutions are at, that tells you something. And a lot of those institutions are selling those options out of the money. So we get a good idea of where where they're positioned, where they think maybe the edges of the ranges are at. And then we have our expected moves, our volatility ranges that, we can line up with those in our higher time frame levels. And as those begin to shift throughout the day, then there's a change in the market. And, some of us in the room, we trade reversion. Some of us like to trade directional. And it gives us a good idea of what those two regimes are, right? If you're going to be in a market that might just stay in a 15-point range all day, talking about SPX levels here. But once those walls start moving, they give us moving targets too. So, if you see volatility is expanding, people are buying volatility. We have targets to reach for. So there's a lot of nuance involved to it with, the other tools in the room that we have all working together. But it's also the sentiment part that I wanted to highlight as well.
Yeah.
Can I share my screen real quick and I'll show you a good example of what it looks like when the walls shift. So I believe this was from Thursday. No, sorry. I believe it was Monday. Was it Monday where we had that crazy trend day to the upside all of a sudden, David? And I remember posting into the room. It's like, hey, if anyone wants an amazing example of what a trend day looks like on the gex ray, then here you go. So let me share my screen here, and then I'll show you guys real quick, and then let me see if I can do this. All right, can you guys see this screenshot of the gex ray right here?
Yep, we got it up now.
Awesome. So here you can see on the ES, right? So what David is talking about is the first thing he does in the morning. It's like he wants to see where these levels come in at, right? And we often say that you got to give the gex ray like 20, 30 minutes to let the walls kind of like settle. Where are they going to be? How far apart are they going to be? That's going to tell you something on sort of like the expected ranges and some, important support and resistance levels for the day. And here you can see like the walls pretty much start settling here, like right after, 10 a.m., right? And then we have an interesting development here where we kind of chop around a little bit in the morning here, and we find some support around the zero gamma or the gamma flip line. And then we actually start trending higher. And where do we go? Well, first step, we're going to go to where the first call wall is. And then now the question is, when price hits this call wall, do price just kind of like find some resistance here and start rolling over and the wall stays put, or does the wall actually roll higher? And here you can see, it starts to roll higher and price follows. And, Monday ended up being a very, very, very strong trend day. And on trend days, you will see that this call wall will just get hit and it will roll up, 3, 4, 5 times. And you can see the same thing also from the put wall, rolling higher as well. And, you can almost think about this as like a trader that's like holding a future position or an option position. And every time this person, hits his target, he's not taking the position off. They're actually like going for more, right? They're rolling up their options, or they keep staying in the trade because they believe that the market is going higher. And that is what this image tells us, that there's like a sentiment expectation based on the gamma in the market that price will continue higher. So I thought this was a pretty good example of like what a trend day looks like on the GEX rate, which is going to look completely different than, for example, a range day. You wouldn't be seeing these walls sort of like roll higher time after time.
Yeah, a lot of times they'll pinch in. You'll actually see the walls coming in. One thing from that image too is you see the put wall jump up quite a bit before price even really picks a direction. And when you see the put wall, where the put walls come in and they settle in, and then the put wall jumps up, 20 points on ES, that's a pretty big clue that, if we do go to that put wall, then we might likely see a flush because the market kind of gets off sides at that point. Whenever you have negative gamma, then the dealers are basically selling into weakness, right? So you get below that put wall, and then you have dealers selling against it as well, selling into weakness, and you could get a really big move. But we generally don't see the put wall move up unless price is going to move up after it. So there's a lot of different looks, and we've got different looks that we really like to trade most in the room. But it's just such a visual tool, right? You don't have to be looking at a chain. You don't have to look at some weird gamma exposure chart that's horizontal and all this kind of stuff. It just lays price right there on it. So really after a couple of days, it just really starts to make sense to you.
Yeah. Yeah. I mean, how can you guys, that example is extremely helpful. Can you guys talk maybe a little bit about when in your trading process, when you find yourself looking at the X-ray or gamma more generally? I mean, obviously you said, Dave, you come in the morning, this is one of the first things that you're looking at, but maybe, just a theoretical trade example, like what you could kind of discuss when it is that your eyes are going over to the X-ray to check what's going on there and the information that's giving you as you make your trading decisions.
Well, for me, it's, there are several different things I use it for. So that's one of them. Look in the morning and see, what is, where the levels come in, those things we already talked about. But it's up on the side the whole time. So it's just up on I've got another screen that's next to me. I've got a couple things on there, and that's one of them. It just stays up. Yep. And so I can just keep an eye on it. And, I don't trade a lot. I don't trade 40 times a day. I may only trade, I may not trade at all. I may trade 2 or 3 times a day. But whenever, if I'm looking to be in a long position and I've got an entry that I'm looking for, and it may be around the put wall, then I may be keeping an eye on that for when we get there. But also if maybe I'm biased long for whatever reason, and I don't really have a good reason to get into a trade, but I notice that it just won't get below 0 gamma, and the put wall shifts up, then that's a reason to a lot of times it's just entering on that data alone, because if you have a situation where you've been in a range for 2 hours, there's a very good chance once you get above that range that you'll have a squeeze effect, right? So then probably one of the most profitable ways that I think I've used it is being able to, when I'm in a trade, I have a target. And one of the things that we do with this tool is that, if I'm long and looking for the call wall, and maybe the call wall is 20 points above where my entry is, whenever we get to that call wall, there's a couple other things we look at that give us an idea if we should take profit or not. Mm-hmm. And when we get to that wall, if it soaks at that wall, hold a little bit for, just in case it does roll up. And if it rolls up, it may roll up 10 points. So that's another 10 points in that trade. It may roll up 5. It may be like the trend day where it rolled up 5 times. But as long as that wall is rolling, it's my job to hang on to the trade. And we've seen it time and time again where it comes back to a previous wall, and it's a great place to get into a trade. And that's the same thing if you actually fade the wall, it's a good place to get out of your bad trade.
Mhm.
But those are the three main ways that I use the tool.
Got you. Norse, what about you? Is that pretty
Yeah,
much in line with how you use it too?
very similar, but I could use a different example because Dave was using an example where he would use the put wall as a support level and then try to hold it up all the way to the call wall. And if the call wall rolls, you try to stay in. I also really like fading stuff. So I like going, kind of like mean reversions. So if we're looking at a day, which I don't think, based off the other instruments I'm looking at, it's going to be a trend day. It's going to be a range day. I'm going to be, interested at trying to fade in that area, right? And I'm going to be looking at other things as well. I'm going to be looking at the higher time frame GEX levels. I'm going to be looking at the volatility ranges as well because I want things to line up. I want there to be confluence, right? And one thing that really helps me um, with the with the gex ray specifically, it's like, let's say I right now, for example, have like a major call wall on the higher time frame gex levels at like 5500, right? But if the gex ray has the call wall at 5505, I don't want to get in at 5500 because
Hmm.
I know that this is an important level for both dealers and market makers. And I know that there's a lot of liquidity there. And the market likes to go to areas of high liquidity. So that's why one reason these areas, these call walls and put walls, almost acts like a magnet for price. So these levels, I think any good level does two things, right? It acts as a target, but it also acts like an area where you can get a reaction, right?
Hmm.
So I would, for example, try to get a fade in at 5505, and as soon as I'm in the trade, right? If let's say price continues higher and it's now above the call wall, right? Now I'm really looking to see if that wall rolls, I got to get the heck out, right? If it stays put, then I feel pretty confident that price overshot that level a little bit, but it's at least going to come back to the level where I can get out of break even if I want to. But it's probably also going to pull a little bit under the wall because there is a lot of liquidity there. There are potentially a lot of sell orders, and I know that dealers and market makers have to hedge there, so there will be a reaction. So that is a common way for me to use it.
Yeah. Yeah, I mean, the way that you guys are describing you're using a lot of the same language and tone as Jay in the conversation I had with him yesterday, and how he looks at flow, as another a very powerful tool for him to have a sense of where institutions, dealers, market makers, the activity that they're doing, how they're positioning themselves, and then as you just described, there's a lot of different ways to use gamma factored in your trading, but one of them, it sounds like, is a confirmation indicator for you guys,
Yeah.
right? Like, you have a trade idea, you think that something could be happening, moving in one direction or another, and you're like, let me get some confirmation or disconfirmation from gamma levels.
And this is flow, right? Like these gamma levels are derived off of the options activity in SPX. So if you have something that has the highest open interest at a certain price level, when that price level gets hit, right, a lot of people are going to take profit, and you're going to see some of that open interest go down. And now it's really interesting for us to see where's the next level going to be, and that's gonna tell you something. So in a sense, like Dave was describing it earlier, the gamma tool is like a live order flow tool where you can see, where the flow is going without actually having to read the tape. It's just like a visual tool.
Right. And as we know, I mean, we teach tape reading at Sang Lucci. We have deep respect for how difficult it is, how hard it is, to learn. We've taught hundreds of people how to do it, but it's not easy. So when we first started looking at the Gex Ray, and we were like, oh, we could actually have a visualization of some of the information that you could glean from tape without actually having to read tape. We got pretty excited about it. So yeah. I mean, let's talk. I mean, you were just starting to touch on it. Let's talk a little bit about how someone who is looking at flow using an unusual options activity, whether they're in the steam room using the wise guy alerts, or whether they're using another, flow provider, something like that, how they might integrate gamma, in conjunction with the flow that they're looking at. I mean, Norse, we got hundreds of people in the room who are using both tools. How are you seeing people, use both in combination with one another?
That one's, beautifully simple, right? Because it's going to give you levels, right? The Gex ray is going to give you levels. So we have 0 DTE, or we have the weekly levels for some of the big tech names as well, right? So for a newer trader, I think it's more important to have, quality over quantity. I would rather have like two really good levels than like 5 to 10 poor ones, So it gives you sort of like a discipline to try to stick to the best levels. But then what you can do is like you look for order flow around those levels, right? It's like similar to what Ranchero and Lucci talks about. It's like you come to a level, but then once you're at the level, you got to go to the tape or you got to go to the order flow to actually confirm that something is going to happen at that level, right?
Right.
And one thing that's great about like these levels that are based off either like volatility ranges or gamma, it's a little bit different than just using like a historical support and resistance, right? Yes, flat lines, support and resistance can be very helpful, but just because a level was important in the past doesn't necessarily mean that it's going to be important in the future. With these
Right.
gamma levels, they are and volatility levels, they're derived off of market structure, right? There are levels that are based off the current positioning in the market right now. So the likelihood of a reaction actually happening right now is much higher, I think. So an example of how people in the room use it, it's like they will pull up the, Gex ray on a name like Apple or Nvidia, and then once we get to these really, really important areas, such as the call wall and the put wall, that's when they start looking for order flow, right? So
Mm-hmm.
let's make a simple example of if Apple is at the put wall, which is usually an important level of support, and all of a sudden you start either seeing momentum flow or clean order flow on Apple rolling in, then it's like, hey, I know we're at an important level, and I can see in the order flow that someone is betting money here. That is really, really good information to have.
Yeah. Yeah. I am going to give a quick plug for the course, because these guys we've decided, the game is so important and so relevant to anybody who's trading off unusual options activity, that we asked these guys to teach 2 classes as part of the Complete Flow Trader, as part of the course. So, and they obliged. So if you guys are watching this and you're curious about learning more about how you could integrate gamma into your trading and into flow trading, highly encourage you to go check out the Complete Flow Trader, our course that is launching with primarily taught by Wall Street Jesus, but as I just said, Dave and Norse are going to be teaching 2 classes, really specifically going way deeper into gamma than we're able to do here in this context. You can use coupon code NOFLOW 2024, KNOW flow 2024, to save 20% off the Complete Flow Trader up until July 1st when it starts. So we really encourage you guys to check that out and get involved. I mean, one of the questions I've been asking everybody in this series about flow, and I kind of want to ask you guys about it with gamma, just to tease apart the value that this information gives you, is what would be the impact on your trading if I waved a magic wand and you just couldn't look at gamma levels anymore? Like, what would the impact be on your trading if that happened?
Dave, you want to take that one?
I mean, the thing that I use the 0 DT, the Gex ray, most often throughout the day, but I think for me, probably the biggest impact would be the higher time frame stuff. So, being able to look at what the gamma profile looks like. We've got our the profile that we're working up for the newsletter every morning, and we have the high time frame levels for TradingView and TOS and stuff like that. Being able to look at that and get an idea, for example, I remember, I don't trade equities much, but I remember it was probably about 2 weeks ago where I think it was Tesla and Apple were both positioned on the higher time frame levels, where they were pulling back. They were weaker than most of the market. But if you looked at their gamma wasn't moving anymore. It had gotten to a point where the market was, I want to say essentially like max short, right? Looking at gamma, they were at an area of I don't know how else to say this, but it just looked like the market couldn't get much shorter. A lot like the other sentiment stuff we look at.
Yeah.
And there were very clear, identifiable levels on Apple and Tesla that if they got above these levels, the gamma levels, that they probably had a lot of room. And when we look at them now, for example, it's the other side of that coin. We have gamma position max long, and maybe it can get longer. I'm not saying that it won't, but this is not a place where I want to, when it comes to intraday trading, that I'm not looking for just a really solid bid under my trades, right? Where I can just go along anywhere and expect it to be, maybe 10 points. I get to pull back 10 points and it'll go in my favor. We may have a fact it's 90 points tomorrow, right? So, being able to get a good idea of what the overall market is, how the overall market is positioned in the options market, if they're bullish, if they're neutral, if they're extremely bullish, that's something I don't really use intraday, but it's part of my process. It's extremely important. So um, I think that would probably be what affected me the most in my trading.
Yeah. Norse, what about you?
Yeah, I mean, I feel like I use gamma kind of like in two ways, right? Because you could talk about just like the gamma in the market, right? We usually look at like XPX, SPX gamma, right? And we measure it in billions. It's like how many billions are we positive and how many billions are we negative, or are we close to zero, right? And it's going to tell me something about like how I'm going to trade that day, right? How am I going to manage my trade and like what I can sort of expect from a trade that I put on. If we have, a large amount of negative gamma, I know that could open up a window of volatility. And that's when you want to maybe hold a runner or like try to, hold on to your winners, because you are in that window of volatility where things can, really unravel and you can get, a lot more points than, for example, the flip side, when you have really, really, really positive gamma and the market becomes more kind of like sticky, like Jay describes it as. He kind of describes it like 2 steps forward, 1 step backwards. If we're in that type of environment, I'm going to be a little bit probably quicker to take profits. I'm not going to like press my runners and things like that. So the overall gamma environment is just going to kind of tell me a little bit on like how I'm going to approach my trading day, right? And then I'm going to come down on, I trade mostly futures. So then I'm going to come down and like look at where the higher time frame levels are. I'm going to, because those become longer term targets, like swing targets, right? So I'm going to see where kind of like the major swing levels are, how wide they are apart, how far we are away from them. And then I'm going to come down on the shortest time frame, the intraday, the GEX rate, and see like where can I actually get like an entry, and maybe that entry lines up on both the 0DT, the GEX rate, and the higher time frame. And sometimes that call wall, for example, will be in the same area for the higher time frame and the 0DT. And let me just explain that concept real quick. When we're looking at the GEX rate, we're looking at the 0DTEs, right? So if we're looking at SPY, we're just measuring the gamma on SPY options that are expiring that same day. So that's, how it works for the indices. On like Apple, Nvidia, Tesla, we don't have the 0DTEs, but we have weeklies, right? So that's what's measuring on the GEX rate, is either 0DTE or weekly. So it's short term to expiration. When we're talking about the higher time frames, we're talking about across all expirations, right? So there will be like a price level or a strike on, SPX, where you have the most amount of gamma on the 0DTE. And then there'll be another level, usually further away, that has overall the most gamma across all expirations.
Makes sense. Yeah. I mean, I of course don't want to give away the farm in this, because people will obviously be paying to learn a lot of the more in-depth information from you guys. But I'm kind of curious if we can go maybe a little bit deeper into some of this. Can you talk about like what zero gamma or gamma flip is in the relationship? How that's factoring into trade decisions that you guys are making?
Yeah. Do you want to talk about that on 0DTE or on the higher time frames?
It's up to you. Whatever you think is most relevant.
Well, I think there's more to say actually about the 0DTE, because I already kind of touched on the gamma flip on the higher time frames, right? It's a different environment when you're in positive gamma than when you're in negative gamma. And
Yeah.
depending on how positive or how negative it's going to be, it's going to create a different trading environment. What's actually pretty interesting on the 0 DTE is we're thinking about that orange line, as you said earlier, that is the gamma flip line. And we also have come up with the name GWAP, the gamma weighted average price. And it almost works similar to how traders use VWAP, right? And a lot of traders like to use VWAP as kind of like a long above, short below type of level for intraday trading.
Right.
And that's a common trading strategy, but also the way that the GWAP or the VWAP is trending is telling us something. On a trend day, you won't have a flat VWAP, right? It's going to be strongly trending higher if it's a trend day to the upside. And we're seeing the similar thing on the GWAP or the 0 gamma line, where it's when we're going to have a trend day, people are going to be buying more call gamma. So you'll see that 0 gamma line actually start trending higher. So that is also, and it's not my favorite level to use for entries and exits, because from the VWAP or the 0 gamma line, you usually get big moves in either direction to the call wall. So if you initiate a trade there, you got to be prepared that if you're wrong, you got to get out fast. I know that at the call wall and the put wall, price is going to be a little bit more stubborn around that price and have more of a reaction. So I mainly look at the 0 gamma as an indication for it. Are we above it? Are we under it? Is it trending higher? Is it trending lower? Or is it not trending at all?
Yeah. Dave, is that pretty much in line with how you use it as well? Same thing?
Very similar to the way I use VWAP. So it's, we have those days where the walls aren't moving, GWAP isn't moving, prices hanging out there in the middle of the chart, and there's not a lot of value for me unless you want to play the edges, play mean reversion. So very similar way.
Got you. Okay. Well, I mean, I feel like we're getting to the edge here of what we can talk about before we start kind of giving away the farm. So this might be a good place to, kind of wind down the conversation. Again, I want to let everybody encourage everybody to check out the Complete Flow Trader, the course primarily taught with Wall Street Jesus, teaches you everything you need to know in order to how to trade flow. You also get 3 months when you purchase the course in the Steam room. So you get a 3 months worth of membership there, which if you are inclined, if you want to go deeper into, trading based off gamma and factoring that in your trading, I mean, Norse and Dave are fixtures in the room, and there, you would have, of course, get access to the Gex-Ray, our tool that we developed in order to help you guys integrate that in your trading. So check that out over wallstreetjesus.com. You can use coupon code NOFLOW2024, save 20% off until the classes start on July 1st. Guys, and again, you can get two classes in the Complete Flow Trader with Norse and Dave, where they're going to go a mile deeper into the stuff than we have. Is there anything that you feel like we left out in this conversation that you want public to know about?
Maybe we can just show our higher time frame Gex levels as well, and how
Sure.
we look at
Yeah.
those. Dave has actually created an indicator for Thinkorswim and for TradingView, and we're working on more trading platforms where basically we just give you 2 text files in the beginning of the day, and then all of a sudden you're going to have all the levels. So if you have someone that want good levels, but you don't necessarily have time or know how to draw them themselves, then we've come up with a solution for you. So let me show you like an example right here.
We want to make it as easy as possible for y'all to be lazy. That's our goal.
Yeah, or you can say that, or focus on other things, right? It's like there's
a good
lot
reframe. I like that.
It's like by not spending 30 minutes in the morning putting in levels, I can, maybe you want to sleep longer, maybe you want to meditate. I don't know. That's up to you. But more free time is definitely not a bad thing, right?
I mean, Dave, I think you were the one who said the best developers are lazy, right? And I feel like a lot of the tools that you've developed, you're like, I don't want to have to do any of this manually. I want to build this thing so that I can just have it in front of me and not have to do any as little work as possible.
Of course, I would say that as a lazy developer, but yeah, I think you're
right. Yeah. So you can see on the screen now, here's an example of volatility ranges and gamma levels on SPX. So the lines that you're going to see in white are going to be the volatility ranges, and volatility ranges are also important because just based on the activity in the options market, people use volatility as sort of like a gauge for expected moves and important price levels. So that's also something that we like to look at. So by pasting in these volatility ranges every morning, you kind of have like a band. You can see like the one standard deviation is within 1 sigma here, and then you have the 2 standard deviations between 2 sigma, and it's basically just an expectation that 93% of the time, or what is it, Dave? You're the math here. 90. What is the
90, 68 point something, 7 or something like that. And then
on the 1 sigma, and then 2
Yeah.
sigma becomes like what,
95.
97, 95. Yeah, roughly around 95% of the time, price would close inside of those white lines. So that gives you already for the day sort of like sets the stage on what we can expect. Of course, price can move outside of those, close outside of those, but generally this is what we're expecting based on the current historical and implied volatility. That's what we're using to derive these levels. So again, they're derived based on the market structure, not just some imaginary line on the chart. And then once you see these lines line up at highs or lows, it kind of gives you confirmation that, hey, this is an important level. Now let's get over to the actual GEX levels. You can see here's the 0 line, right? So just by knowing that we're above the yellow line here, we know that we're in a positive gamma environment. So this is a really easy way to just come in, load your levels, and then to know that we're in a positive gamma environment. And then we can see here, like, where are we, on the put support is like, since we've been trending, it hasn't rolled up. It's just way down here. Here's the minor. So we give you 2 levels. We give you a minor and a major. So here's the minor put support. You can see actually lines up right here. So that's quite nice. I like to see structure around those levels. And then the major is all the way down here, right? And then if we look at the call side, we're above the minor and we're closing in on the major, right? And I believe the last major call wall on Monday was at 40, well, no, it was at 50. Where was it? It rolled up 50 points after Monday, right?
That was 2 days ago. Yeah.
2 days ago, yeah. So we broke above it, and then the next day it just rolled way higher, and that's similar to the 0 DTE. If you break price and then that wall rolls higher, it tells you something, right? And here's the really cool part. When you load all of these levels into TradingView or Thinkorswim, you can just flip over to any other chart that we have the levels for. So you can see here, I'm going to just pull up Apple, and it's going to just take a little bit time to load, and then boom, here's your levels, right?
One of the things I want to point out real quick, Norse, is like if you look at SPX,
Yeah,
that gamma, the call wall is just a few points above price, right?
yeah.
When you pulled up Apple, you've got much more room there. That's one of the things I pay attention to. Remember, these levels are where the highest open interest is. And if that wall is moving up 5 points, and you're at a point where positive gamma is at an extreme, how much more do you expect out of this, right? It may go to 6,000, but it may do it in little increments, and it may pull back 100 points before it does. But then when you have something like Apple, or which we don't have anything that's really going to show that on the call side right now, because a lot of stuff is really extended. But if we get above this structure where that call wall happens to be, then we expect that call wall to roll up. If it doesn't, that tells us something. But we expect it to roll up, and we look to where it rolls up. If it rolls up 50 points above, that's a pretty good sign that, people are expecting more volatility, and further gains in Apple, or however you want to say it. Because you're not going to see billions of dollars come in way out of the money on stuff that they expect us to expire worthless, right? So sorry, I just wanted to mention that it kind of highlights the importance of the room to the walls as
and
well.
Apple is actually a really great example. Like, I promise you guys, we didn't plan this, right? But this is how Apple traded based on these levels on like last week, or this week. And you can see here that we came into this 220 line, and it just respected that resistance line like pretty strongly. And then we're coming in here and we do break support a little bit, but we take it back, right? And then we can see, where did we go when we broke that support? Well, it actually stayed within the 2 sigma, and we closed within the 1 sigma range here. So these are low effort most of the time really, really good levels. I haven't found any levels that personally work better for me. And I'm a guy that just wants, less but higher quality levels. So this is all I use for my trading: the volatility ranges, the higher time frame call walls and put walls, and then combine that with the X-ray. Pull up Tesla real quick. People probably want to see that as well. And you can see it just takes a few seconds, and then it's going to load all the levels right here.
That's awesome.
It's pretty
Yeah.
sweet. Dave saved me a lot of time.
Yeah, the goal of all these tools is to make it as easy as possible to integrate this, this data into your guys' trading. But it's one thing to have the data; it's another thing to know what to do with it, right? So if that's something that you guys are looking to do, really encourage you to check out the Complete Flow Trader. We think that, as we've talked about before, this course is not meant to be a trading boot camp of teaching you everything you need to know about trading. This is really about skill acquisition. If you're somebody who's like, I want to acquire the skill set of being able to use unusual options activity, use flow, and then of course, as we're talking about gamma, then we've made it as easy and as efficient as possible, for you to do that, to learn that information, and then wake up the next day and hopefully start using it. So check out the Complete Flow Trader. Course starts on July 1st. You can learn directly from these two guys. Norse and Dave, thank you for taking the time to do this and share so much about kind of your process, your perspective, and your trading. Really appreciate it.
Of course.
Yeah. Thank you, Charlie.
Awesome. Thanks, everybody.
Take care.
Peace.